Do you have any faith in this comeback? Would you be buying into it, that the worst is behind us, Tim, or we just simply don't know at this point?
I think it's really hard to try to pick bottoms in the market or pick tops in the market. Certainly, you're having a revaluation of the market based on higher interest rates, and certainly a market that was due to correct at some point. So hard to pick today. You might have picked Thursday and then invert on Friday. So I think what we're seeing is that over the long run, we've had a very high allocation to stocks, and people are starting to rebalance as there's some competition for stocks now in the marketplace.
But do you think that earnings for some of these mega cap tech names in particular, like a Meta or an Alphabet or an Apple or an Amazon, change the story, change the appeal of these stocks? Because for so long it was about higher interest rates. You don't want to go into long duration technology names. But now there's a real focus on fundamental slowdown for some of these giants and the fundamentals that they're facing.
Right. We've basically been importing inflationary factors from other areas of the economy, whether it's the conflict in Europe creating higher energy prices or supply chain issues creating higher commodity prices and higher grain prices. So you have a lot of things that don't really affect the technology sector affecting the rest of the economy. So, absent the higher interest rates, you might think that technology would be a pretty good place to invest because they don't have the same inflationary pressures on the cost of goods sold. So not really bearish on technology. Just that we're having the highest valuations come in when interest rates go up.
Is there anything you like? Any massive dislocations here as a result of the selling?
Well, I know any time that you have massive dislocations across the market are times for people who are long-term investors to seek bargains or seek reasonable prices for things that have good earnings. And tech writ large has had pretty good earnings. I know we're picking on retailers that are a combination of retail and tech because their retail businesses are struggling a little bit more. So I don't see any reason why the long-term secular trend of technology isn't going to continue.
And finally, a lot of people are making the valuation comparison, I don't know, to the dot-com bubble, to other periods in the market, like the financial crisis, in terms of some of the moves we're making. How do the tech valuations stack up now versus some of those other pain points in history?
Well, just certainly on a real basis, the valuations going into this correction of the market were much lower. Right? Back in 2000, you had an S&P at 32 times earnings at one point, and you had a NASDAQ at 60 times earnings. And we did not enter this correction at those kind of nosebleed levels, even though the interest rate environment was about half of what it was in 1999, 2000. So hard to make a real good comparison. We also don't have the pressures of Y2K that really led up to the bubble in technology. So I don't think you can make a great correlation to that, but certainly it's never fun seeing the volatility we're seeing in the marketplace now.